Hi, I'm Lena, and welcome to Super Data JP, the channel where we turn Japan's real estate and cost of living numbers into answers you can actually use. Every video here is built on verified government data, not opinions, and not guesses. Whether you're planning to invest, relocate, or just curious what life in Japan really costs, you're in the right place. Let's get into today's numbers.
Let's start in Tokyo. The average condo price across the 23 wards has jumped past 36 million yen this quarter, and prime areas like Minato Ward now regularly clear 50 million. It's the most expensive market in the country, and it just keeps climbing. But higher prices come with a catch. Tokyo's surface rental yield has slipped to just 5.2%, the lowest of any major Japanese city. You're paying a premium for stability, not for cash flow. Zoom out 3 years and the story is clear. Tokyo condo prices are up over 60% since early 2023, while yields have quietly compressed from 5.75% down to 5.22%. Investors are chasing safety, and safety is getting expensive. Minato Ward is where global capital lands first. Roppongi, Azabude, and the new luxury towers around Tokyo Tower attract foreign residents, embassies, and corporate housing budgets that don't blink at the price tag. Good news for overseas buyers. Japan places no restrictions on foreign real estate ownership. A passport and valid ID are enough to close a deal. The harder part is financing. Most non-resident buyers pay in cash, since Japanese banks are cautious about lending overseas. At today's price and yield, a typical Tokyo investment condo brings in around 160,000 yen a month in rent. Solid income, but on a much bigger initial outlay than anywhere else on this list. Tokyo's verdict: this is a wealth preservation play, not a cash flow play. You're buying into the deepest, most liquid property market in Asia and paying for that safety every single month. Head west to Osaka and the entry price drops sharply. The average condo in the central Chuo Ward area runs about 21 million yen, barely half of what you'd pay in central Tokyo for a comparable unit. Osaka's surface yield sits at 5.73%, noticeably higher than Tokyo's. You're getting more monthly income for a smaller upfront check, a much friendlier entry point for first-time investors. Osaka prices have climbed around 54% over the past 3 years, driven by tourism recovery and the 2025 World Expo effect. Yields dipped as prices rose, but they've held up far better than Tokyo's. Chuo Ward covers Namba and Honmachi, Osaka's commercial and entertainment core. It's dense, walkable, and packed with the kind of foot traffic that keeps rental demand steady year-round. Osaka's real estate agencies have grown used to overseas buyers, especially from mainland China, Taiwan, and Hong Kong. English and Chinese-speaking agents are easier to find here than in most of Japan outside Tokyo. That yield and price combination works out to roughly 100,000 yen a month in rental income, on a property that costs about 40% less than its Tokyo equivalent. Osaka's verdict: a strong middle ground. Lower entry cost, better yield than Tokyo, and a tourism economy that keeps demand alive. For many overseas investors, this is the sensible starting point. Nagoya is Japan's industrial heartland, home to Toyota and a manufacturing economy that rarely makes headlines. The average condo price here is about 20,250,000 yen, similar to Osaka but with a very different economic engine. Nagoya's yield is the strongest among the 3 biggest metro areas at 7.58%. That's meaningfully higher than both Tokyo and Osaka, for a market most overseas investors have never even considered. Nagoya's price and yield have both been choppier than Osaka's over the past 3 years, dipping in 2025 before rebounding sharply this quarter. It's less predictable, but the underlying industrial economy remains genuinely stable. Naka Ward is Nagoya's downtown, anchored by the Sakai Entertainment District and the city's main business towers. It's compact, well-connected by subway, and consistently in demand from young professionals. Nagoya sees far fewer foreign buyers than Tokyo or Osaka, which can mean less competition for good listings, but also fewer English-speaking agents and less established support for overseas paperwork. The math here is attractive, around 128,000 yen a month in rent on a property priced similarly to Osaka. Higher yield, same entry cost. Nagoya's verdict, an under-the-radar option. If you're comfortable doing a bit more legwork, the yield here beats Japan's two biggest cities without a corresponding jump in price. So far, the pattern is clear. The bigger and more famous the city, the lower the yield. Tokyo protects your capital, Osaka offers balance, and Nagoya quietly out-earns them both. But the two highest yields in this entire ranking are still ahead of us. Fukuoka is the outlier on this list, Japan's only major city with a still growing population. The average condo price is around 15 million yen, the second cheapest entry point among the 5 cities we're covering. Fukuoka's surface yield comes in at 6.66%, comfortably ahead of both Tokyo and Osaka, on a much smaller initial investment. Fukuoka prices are up about 40% over 3 years, a steady sustained climb rather than a sudden spike, while yields have eased only slightly from 7.58 down to 6.66%. Chuo Ward is Fukuoka's center, covering the Tenjin shopping district and the daimyo startup and cafe scene. The city has actively courted tech companies and remote workers, and the rental demand shows it. Fukuoka's proximity to South Korea and China, just a short flight away, has made it a magnet for regional tourism and business travel, which supports both long-term rental and short-term stay demand. At this price and yield, expect roughly 84,000 yen a month in rent, the lowest absolute rent on this list, but paired with the second lowest purchase price too. Fukuoka's verdict: the best-known value play in Japan among serious investors, and one of the only major Japanese cities still gaining residents. Small checks, solid yield, real population growth. Finally, Sapporo, the northernmost city on our list and the cheapest by a clear margin. The average condo here runs about 14,280,000 yen, less than 40% of what you'd pay in central Tokyo. And here's the number that matters. Sapporo's surface yield is 10.07%, nearly double Tokyo's and the highest of any city in this comparison. Sapporo prices have risen the fastest of all 5 cities, up roughly 75% over 3 years, driven by a tourism boom and growing interest from Hokkaido's expanding ski and hot spring resort economy. Yields have compressed from over 11%, but they're still far ahead of the pack. Chuo Ward covers Susukino and Odori, Sapporo's nightlife and shopping core, and the gateway for the millions of visitors who come for snow festivals, skiing, and hot springs every year. Sapporo's inbound tourism has surged, particularly from Southeast Asia and Australia, and that's fueling strong demand for short-term rental-style properties near the city center, on top of the standard long-term rental market. Despite having the lowest purchase price on this entire list, Sapporo generates around 120,000 yen a month in rent, more than Fukuoka and Nagoya, on the smallest investment of the 5. Sapporo's verdict: the highest yield, the lowest entry price, and real tourism-driven demand. The trade-off is a smaller, more seasonal economy, but for pure cash flow, this is the strongest number on the board. Ranked by yield alone, the order is clear. Sapporo leads at 10.07%, followed by Nagoya at 7.58, Fukuoka at 6.66, Osaka at 5.73, and Tokyo trailing at 5.22%. Ranked by price, it flips completely. Tokyo is the most expensive by far, followed by Osaka, then Nagoya close behind, with Fukuoka and Sapporo as the 2 most affordable entry points. If you want capital preservation and the deepest, most liquid market in Asia, Tokyo wins. If you want maximum monthly cash flow on the smallest possible investment, Sapporo wins, with Fukuoka as the safer, higher growth alternative. There's no single right answer here. It depends on whether you're investing for safety, for income, or for growth. But now you have the real numbers behind all 5 cities, not just the headlines.
And that's today's breakdown. If you're serious about real estate or moving to Japan, research like this is exactly what separates a smart decision from an expensive mistake. Subscribe so you don't miss the next deep dive, and drop a comment if there's a city or word you want us to cover next. Thanks for watching, and I'll see you in the next one.